Hey guys, how's it going? My name is Patrick, and in this video, I wanted to share with you some of the price points that you can be looking at to buy some of these value stocks. So I just want to cut right to the chase and then work backwards. And basically what I have here is some of the support level for some of these stocks that have huge upsides. Okay, so right here we have Play, which is Dave and Buster's. This got as low as 4.8, and it had extreme amounts of support at that level. Okay, now the time that I'm recording this is Monday night, the day before the stimulus package is supposed to come out. And as you can see, Dow futures are at plus 674 with the anticipation of a $2 trillion stimulus package. And if we go down here on I think it's in my trading, I have Play, right? You can see it rose 30%. So that was a pretty darn good price, and that was kind of the low point. Same with Ventus. Ventus got as low as 13.9, which is like a senior facility type place. If you want to just take a screenshot or maybe write down some of these numbers, because these equities were trading at these price points at a certain period of time, and even when the market was going down, these stocks went up, right? So for example, I have open Six Flags, and I can look at this 5 days. So even here on Wednesday and Thursday, or I should say Thursday, Friday, when the market was going down, it was going up. So the same thing with a number of these, whether it's airline companies, if you look at United Airlines, as well as Carnival Cruises, right? So all three of these had that support level, like right here, right? So point is that if you can get any of these companies at or around that level, then you should go ahead and do it, in my opinion. So this video is for entertainment purposes only. This isn't, I'm not giving you any financial advice. Please don't take it as that. It's your own money, and stocks carry a lot of risk. So again, I just wanted to show you kind of where the support levels are for various stocks and industries that have a ton of upside. So I'm really looking at the upside potential of Carnival Cruises, United Airlines, Six Flags, right? So there's going to be plenty of depressed stocks. Like, so just take, for example, Apple. You know, Apple's trading at, they get like 246 now. It got as high as 336. So it's down 100 points, you know. So what's your 5-year timeline of where Apple can be? You know, it can get, over that timeline, it can get up to maybe, let's say 500, 600, 700, right? But with these, you have the potential to, in my estimation, 10x your investment over the next 4 or 5 years, because I think it's going to take, let's say, 1 to 2 years from now, maybe a year from now, for the economy to kind of get going again, right? So obviously, it depends on how everything shakes up. And my overall prediction is that the government is going to prop up everybody over the next couple of months, and they're going to inject into the economy. They really can't do any more than, I believe, $4 or $5 trillion, and that's going to kind of support these industries, and they're going to essentially bail them out, right? So if you were to look at a company like GM, and up here, if I were to look at my long-term value, I basically have Ford, and I do have GM in here. So if you take a look at GM, and I bring up GM because GM was a company that was bailed out by the government in, I think Obama bailed them out like in 2010. So what they did was the government ended up losing like $12 billion. So they gave GM something like 40 or 50 billion, right? And they took quote unquote ownership in the company in the form of stocks, and they ended up incurring a loss of like 10 billion. And then what GM did is they took that money and they said, thank you very much. And on all the years that they had all this profit, right, over the last 5 years, you know, we can open this up to a max. And okay, they get a bailout here, and you can see like, oh, we're struggling. Please, I think this is when they were bailed out. I'm not totally sure. Point being is that they took all these profits. You know, look at this. You know, these billions and billions of dollars in profits that they had, and then they did stock buybacks. They did a dividend. Where's their dividend? Okay, 8% dividend, and they increased CEO and executive pay, right? So that's what's going to happen again. Is we're going to bail out all these big companies, which is honestly it's fine because people need jobs, right? And these are employers. But what's not okay is when they use, in my opinion, taxpayer money to buy back stock and to offer high dividends and to increase CEO pay. That's not okay, but nobody really cares enough about that for it to make any difference, right? So that's why if you're looking at investing in some of these companies, and that's why they're having support, like really with what's ahead of us and how these companies are going to be losing billions of dollars, they should be trading a lot less, right? But they're not, because everybody knows that they're just going to get a bailout, right? Which is pretty crazy. So, and that's why, you have Six Flags. I mean, if all these companies weren't going to get a bailout, then they were all going to fail, But again, they're all going to get bailed out, and that's why they have really strong support at these levels, even with the market going way down. So how this is going to work is you're going to have a few months, because the bottom of the market is going to occur at the point where infection rates have topped. So that's what you want to look for, is once infection rates have hit a high point and then they plateau and then they start going down. Once infection rates start going down, that is when you want to invest. Again, in my opinion, you don't have to do it, but that's really what I'm going to be looking for. Now, as far as the cases go, so what's going to happen from there is I think that we'll have different outbreaks at different points in time. But generally speaking, once we've had that crescendo, right? And once we've kind of plateaued, and then you start seeing infection rates start going down, that you're going to start seeing the market go back up again, right? So I don't really know when that's going to be. The market might be at, who knows, 12, 13,000 at that point. And, that's going to be, basic. That's, again, in my opinion, that's going to be your bottom. So that's what you want to look for, infection rates, and when infection rates start going down. So that's going to be it on this video. I think I just wanted to take a look at, and you can open up other stocks that, again, I was just looking at major value plays. I have Halliburton over here at a certain price point, Exxon certainly at a certain price points. That's riskier. Because what we're looking at with oil is oil potentially going to like 0 or something really, really low is what they're saying. So I would be a little more apprehensive with that. I know Chevron, CVX Chevron is a more stable company, let's say, as opposed to Exxon. But in a bigger picture, again, once we're through this, oil is still the dominant source of energy. So you should see, a big rebound, I believe, in stocks like Chevron and Exxon. So that's going to be it for this video. Please like and subscribe if you would like to see more videos like this. Thanks a lot.